Have you ever checked your credit score and felt that sinking feeling when it wasn't where you wanted it to be? You're not alone. Millions of people struggle with low or average credit scores, and often they think it takes years to make a real difference. But here's the truth: you can actually boost your credit score by 30 to even 60 points in as little as 30 days. And the best part is you don't need to take on new debt to do it. Today, I am going to walk you through practical steps you can take right now to give your credit score the jump it needs. Let's start with the foundation: understanding how your credit score is calculated. Your score is built on 5 major factors: payment history, credit utilization, length of credit history, new credit, and credit mix. Payment history makes up the biggest chunk, about 35%, followed by credit utilization at 30%. This means the fastest ways to see improvement come from addressing these 2 areas. Step 1. Make sure your payments are current. If you're behind on a bill even by just a month, catching up can make a dramatic difference. Late payments hit your score hard, but once you bring those accounts current, the negative impact starts to fade. If you're only a few days behind, pay immediately, even if you can't pay the full balance. Making the minimum payment before it's 30 days late can prevent serious damage. Step 2. Lower your credit utilization. This one is a game changer. Credit utilization is the percentage of your available credit that you're using. For example, if your credit card limit is $5,000 and you spent $2,500, your utilization rate is 50%. Ideally, you want to be under 30%, and if possible, under 10%. So, how do you lower it quickly without taking on new debt? The answer is simple: pay down your balances strategically. Start by focusing on the card that's closest to its limit. Even reducing the balance slightly can boost your score, because utilization is calculated per card as well as overall. If you have some cash set aside for emergencies, consider using a portion of it to pay down a balance. You can always rebuild your savings, but the immediate score increase can save you money on interest rates and loan approvals. Step 3. Ask for a credit limit. Increase now, before you panic. This doesn't mean taking on new debt. By increasing your available credit, you automatically lower your utilization rate as long as you don't increase your spending. For example, if you have a $2,000 limit and regularly carry $600, your utilization is 30%. But if your limit is raised to $3,000, that same $600 balance drops to 20% utilization, which can give your score a quick lift. Just be sure to request a soft pull so it doesn't ding your report with a hard inquiry. Step 4. Dispute any errors on your credit report. Studies show that about 20% of people have mistakes on their credit reports, things like accounts that don't belong to them, payments marked late that were actually on time, or balances that are outdated. These errors can drag down your score without you even knowing it. Get a free copy of your credit report from annualcreditreport.com and review it carefully. If you spot an error, file a dispute online with the credit bureau. By law, they have 30 days to investigate, and if the error is corrected, you could see your score rise quickly. Step 5. Become an authorized user. This is one of the fastest hacks to improve your credit without debt. If a trusted family member or friend has a long-standing credit card with a low balance and great payment history, ask if they'll add you as an authorized user. You don't even need to use the card; just being linked to their account can add their positive history to your report. This method can sometimes give you a boost of 20, 30, or even more points in a single month. Step 6. Pay your bills strategically. Instead of waiting for the due date, pay down your credit cards before the statement closing date. Why? Because that's when the lender reports your balance to the credit bureaus. If you wait until the due date, your balance may appear higher, which keeps your utilization up. Paying a week earlier ensures that a lower balance is reported, giving your score a quick advantage. Step 7. Avoid new credit applications for now. While it might be tempting to open a new account for extra credit, every hard inquiry can lower your score a few points. Since the goal is to increase your score in 30 days, Focus on managing what you already have rather than adding new accounts. So let's recap quickly. Bring all accounts current, pay down balances to lower utilization, request credit limit increases, dispute errors on your report, become an authorized user, pay bills before the statement closes, and avoid new credit applications. By combining these steps, many people see a boost of 30 to 60 points or more in just a single month. And remember, your credit score isn't just a number, it's a tool that impacts your financial freedom. A higher score means lower interest rates, better loan approvals, and sometimes even more job opportunities. With just a little focus and discipline, you can take control of the number and open doors to a stronger financial future.